Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, August 16th, and we got a couple of economic news releases scheduled for today, and a couple more pretty important. The first one here is the weekly jobless claims. We had 364,000 people applying for unemployment last week, and we forecasted for this week about 365, and basically came up to 366 this week. So obviously it increased a little bit. Next item to note is the housing starts for July. We had back in June 354,000 homes being started to build. We figured that would increase to 765, and it actually went the opposite direction. So the builders obviously pulled back on creating new homes in July. Uh, from, and then last but not least, we have an important one here. This is the manufacturing in the Philadelphia region, the Philly Fed for August, and we had a negative 12.9 in July. We forecasted negative 5, and it was negative 7.1. So it kind of fell in between there. All right, and so let's jump over to the headline news. Stock market's up a little bit. It's not a lot of trading. Dow's only up about 30 some points right now. A lot of it is due to the tech sectors up. There's also some comments that came out of China that Jim Bao, the premier for their, because their FDI was like their GDP numbers basically decreased a lot, quite a bit from last year, and now there's talk that maybe there might be some stimulus coming to stimulate their economy on the horizon. So now they might be going in the opposite direction, at least stop the free fall, so to speak, and then kind of at least kind of level it off a little bit. So you may see uh, some government intervention in there to kind of help jumpstart their economy a little bit. So obviously the investors are going to like that. So let's take a look at the bond market, see what interest rates are. As you see here, we had a huge drop down here. It was about 52 basis points. We start off here. We went up a little bit. We've started down, so we're right in this range. So right now, what we're doing is we have this trend line going down this way, which means rates are going up. So anytime you see the bond market or these reds, means rates are going up. And of course, where the level is what's important. So right now, we're going through a kind of a correction is really the only way you can explain this because some of the economic news is really should support it. But right now, we have been kind of in this position for a long time and kind of been oversold position for a while. And now it's just kind of correcting its way. Do I think it could possibly go back up to this level? Yeah, it depends what kind of economic news we have coming out. I do think we might have a little bit of a bump up ahead, so it's possible that we could come back upwards a little bit. And we are also in an area of second and third quarters typically where there's not much good earnings coming out. So those good earnings usually are between first and fourth quarters. So so we have a little time in between there. So right now, interest rates are a little bit higher today, or about the same as where we are about where we left off yesterday, because we left off yesterday here and here. So depending on the lenders, if they reprice for the worst, how many times it probably did a couple times yesterday here, and basically it's just going to follow suit from carryover into today's pricing. So most likely it's going to be either about the same or maybe slightly better, depending on when the lender came out with their pricing this morning and where the market goes. So right now, as you can see, the market's been very volatile. We've had some pretty sharp declines here, especially this past week here, and so I'd be very cautious here. But yeah, but we'll hopefully see something new tomorrow. But again, these are more of a correction base what we're going through right now. All right, folks, you guys have a wonderful day. Thanks for stopping by and watching. If you guys like to see more of these reports, stop by mikesdailymarketreport.com. Feel free to subscribe, and you can have these emailed to you on a daily basis. Have a wonderful day.